Hello, everyone. Happy Friday. Happy options expiration quarterly, technically triple witching, but people still call it quad witching. So, how is everyone doing? One of my four least favorite trading days of the year, the other three being all quad witching days. Good morning, Patrick. Good morning, John. Good morning, Tony. Hey, good morning, Harold. Good morning, Sterling. Thank you for putting in all the news, Sterling, and the earnings. This isn't going to end well, also, the MicroStrategy thing, but we don't need to go into that right now. What else do we have? I got to see. Oh, I didn't see that one. Colgate, thank you for putting that in. Announces new $5 billion buyback, a dividend up to 52 cents. I might have to check out Colgate. Might have to take a look. Lennar was a beat. Again, there's not a lot of earnings there, but FedEx was a missed on EPS, beat on revenue, but guided lower and gapping down below key support. Would not be touching FedEx at the moment. Micron was a beat. Nike was a beat, also guided lower and gapping down. NIO from this morning was a miss. Good morning, David. Yeah, I saw this yesterday. This is insane. DoorDash is now allowing customers to finance their food delivery orders. If you have to finance your food delivery orders, either go pick up your food if you can't pay for delivery food, or you just cook yourself. I mean, you're in trouble if you got to finance your delivery of food. Good morning. Everything's out of whack. Jeez, come on. Good morning, Royal Palms. We can. Good morning, Heinrich. Good morning, Anissa. Hello, Charles. So, yeah, I saw this. So Dash announced partnership with Klarna. 3, payment options, pay in full using Klarna. 2, paying for interest-free installments. Pay later, effectively taking on debt for food. It's ridiculous. Good morning, Jacob. It is crazy, Charles. I mean, come on. This things behind the scenes are really falling apart. But separate from that, will the markets fall apart? Well, we got Goolsby and Williams speaking today, but besides that, there is nothing. Everything's the big option expiration. So we're gonna have to see. It's going to be interesting next week going into quarter end. Also after this OPEX to see if it frees up. What it frees up, and if we start the next move down lower heading into the quarter end. So far this morning, it's very red. There's not a lot of green to find anywhere. So everything's sort of getting sold this morning. Groups, every group is negative. Everything, let me just refresh this. I haven't refreshed in about 10 minutes. Yeah, everything's still negative. Being led by technology and consumer cyclical. Fed watch still has 3 cuts priced in. Fear and greed still in extreme fear, and the market's still expensive. We already went through the earnings. Thank you again to Sterling for putting them in there. All right. So S&P, again, we're still having the buying pressure up here. The selling pressure in the rotation zone. That's why you got to be careful of doubles against the rotation zone. They're still tradable, but you got to be careful of them. Now, hope everybody saw, yesterday I spoke about it, what I was watching for into the open. And remember, I said I was watching for that pullback and this to hold the double, and we made a real nice double. But that's why you don't get greedy with these things. You know, you can try to ride it beyond the targets, but you at least got to raise the stop, because that double that triggered, and then the selling pressure came in. The selling pressure, if you look here on the daily and we zoom in, because it's again into the rotation zone, that doesn't mean you have to collapse, but look at this. Spike up on Monday, lower close. Tuesday, in the rotation zone and rotating down. Wednesday, spike up and closing back down. Yesterday, spike into there and closing back down. So again, anything that starts above about 57.35, they're selling pressure, but the really big pressure starts coming in above 57.50. Doesn't even look like we're going to be getting there today. Now, the double is technically still in play. I'm going to be paying attention at this key area today between 50, we're just below it right now, between 56.66 and really 56.39. So what's in the middle of that? 56.50. I'm going to be really paying attention to 56.50 today and seeing if there is a pin somewhere near that. If we start breaking down below 56.40, it could get interesting. It could get really interesting today. So far, S&P down almost 1% and the NASDAQ down just a little over 1%. Do we still have a potential double top? Technically, this spike up uh, invalidated. So we do not. What's interesting though is you start getting below this 56.50, it's into a clear path move. That's why I'm going to be using just the harmonics. 56.39, 56.40, and 56.13. And then I'll start looking at the round numbers. But I'm really focused on this 56.50 area, at least until unless it's broken with some momentum. What's still the technical level to invalidate the double is still 56.23.50 on a closing basis. So to the upside, I didn't do upside. My key resistance right now, oops, I didn't mean to move that one. I wanted to grab this line. The very key resistance is about 56.92. And then we have on a rally 57.26 if it can even manage to get up that high. Good morning, Richard. NASDAQ. Remember, these are the days that if you don't have to do anything, these are the days for longer term stuff is just managed positions for me. I would not, if you're going to take off, even if you're a good day trader, unless you have great results on this or it turns into a massive momentum day, sit on your hands, take the day off, or watch and work on your trading plan or work on something, but don't just sit and try to overtrade a market like this, especially on option expiration. Interesting enough, the NASDAQ trading against a very key support level right now. Very key support level, and if it does break down, it goes into a clear path. So the key levels, I want to change that color. Key levels, we're trading right at the 62.5. You see this also? Now that's not the invalidation point for the double because that's still technically 19,608.50. But off this rally, this is at the 62.5 for that rally. So I'm going to be watching where we close in the next 48 minutes to see if we close below there because that tips the probabilities that we could easily retest this lower range. And 19,500 would be a very key level I'd be watching if we get momentum to the downside. Before there, it would be about 19,575, then 19,600. So that's what I'll be watching right here. Good morning, Ted. On a rally, again, it has to start getting above 19,675. Then I'm just at 19,700. And on a stronger rally, I'm really going to be keeping an eye on 19,800. Round numbers come into play a lot more on these on OPEX days. So the Dow also coming into a very key support level, but the Dow does not have a clear path move in the 4 hour until it breaks below this 41,650 area. 41,650 area starts getting into a clear path move. It's an advanced one. But until you get there, there's a couple very key levels. You're trading against one right now, about this 41,900, and then 41,800 is your next key level support, and then you have 41,650. To the upside on any rally, very key resistance right around 42,200. Again, looking at the daily on this, pops into the rotation zone are getting sold. So going to be watching. I think the Dow's going to break down and retest this low area next week, going into end of the quarter for next week, and then it will be interesting to see if we set up a double bottom, and then if that would trigger or if we're going to break. Remember, because also the Dow, we did trigger last week a massive double top pattern, so it's going to be very interesting over the next few weeks. Russell. Russell into the rotation zone, breaking below yesterday's low, which with cycles tipping over, which for me is a rotation zone sell signal in the Russell. So going to be watching for a continued downside here also. The key target area is, my first key target is 2058, and then we have 2044 as the next key target. A close below there. If we had a big selling day, then next week I'm really focused on the Russell testing the lows from last week. To the upside, let's dive down a little in the time frame because there's pretty key. I hate when I can't grab a line. There we go. There's some very key support coming in just below the about 2055. And then to the upside for a rally, we're looking at, let me find the key level. We're looking at right about 2080 on any rally. The VIX getting elevated, not been able to sustain much below 20. You know, it tried to dip below there yesterday and move and closed a little below it, but now moving on back up. So 20 is becoming a very key, the 20 area is becoming a very key floor. And there is, I mean, the VIX is starting to say, hey, something's not okay. But we haven't broken another key support. DAX was a contract roll. So just in case you were wondering, it's gone to June now. So DAX, I had to reset up the levels, but the key thing to watch for on a closing basis is 22,961. The notes, not the best formed, has the shoulders a little weak on the right side, but going to be watching this if we close below 111.18 above. If we close above 111.18, flat neckline, with a weak right shoulder, but it would work with the first and second target still being within the move that started it. So we could then see yields continue to drop again on the yield basis. You can see here. Here's it on the daily. You have a weaker shoulder on the right-hand side, but watching this key level about 415. We close below that. We could see a continued pullback in the yields towards the lows from last September, back below, well below 4 to possibly 3.7. It has not triggered yet. Again, on a rally, very key resistance is 4.3. So those are a couple of patterns I'm watching there. Dollar index confirmed again, confirmed the double, but yesterday and today confirmed a double, but not triggered yet. So far, not triggered today. So keeping an eye on that. And let's just jump to the euro, because the euro also has confirmed a double top, but not yet triggered it. But it could potentially trigger it today. So going to be watching for that too. What else do we have? Gold, crude triggered a extended. Why this was still valid, I covered that the other day, because it did confirm before it got invalidated. So it doesn't matter how far to the right it goes, and it was finally triggered yesterday. Not the best pattern, but going to be watching to see if it can sustain any rally at all here. Gold, not much to talk about so far, a sideways correction. Still stalling out that 3063 area, harmonic area, and that's where it stalled out. So far, sideways correction, letting the rotation zone catch up with a very overbought condition. So this either has to have an extended sideways correction or some kind of pullback to get it back down to more insane levels. And on a weekly basis, you see pulled very far away from the rotation zone again. But that does not mean the rally has to end. Just know where your trailing stops are based off the time frame you're trading. Copper, not much to talk about. We covered that yesterday. The yen, just a mess. I'm still watching for it to possibly roll back down before, unless it breaks this trend line to the upside. My warning sign is a close above about 149.80. And then if it takes out the trend line, we could be seeing a shift in the yen. So far, not a stronger pattern other than that. We'll get to some other stuff in a second. Spiders, same thing as the futures. There's massive selling pressure above 568.50, especially. So today, a gap down. Going to be keeping an eye right now. Now, remember, the stop did raise in the spiders. So a close below 557, 557.68, I think it is, would take the remaining double off the table, or a trade through 555 intraday would invalidate it. Other than that, I'm pretty much using a harmonics. The Qs, which is not a stop raise, but still with the gap down today, I'm keeping an eye 473.71. We're still above that level. Right between 475.90 and 473.71 is the key support zone. We start closing below 473.71 and be watching to invalidate the double and retest of the lows from last week. We wanted NVIDIA. Overall, we have, don't trade crossovers, but I'm in bearish mode on the weekly, bearish neutral mode on the daily. Still watching for rollover plays on any rallies in NVIDIA. There just aren't a lot of great setups yet, but this is definitely starting to weaken more. It's in a huge consolidation pattern. And on the monthly basis, it's in the rotation zone. But again, NVIDIA still, the PE isn't as bad as it was, 39.90, but it's still starting to slow down. At least on a monthly basis, we're getting out of the massively overbought conditions. Going after next week, it'll be interesting. Because why do I say that? On a monthly basis, we might be setting up for a percent beat buy, so I will be watching this month's high going into next month. That's the longer term perspective. So pay attention to that. So that could be traded before, but it would have to follow through with a full monthly close. But it could be traded before. So even on a daily basis, if we start taking out this month's high and sustaining, now we'll have to check into this next week if you want to remind me. But that will be key moving forward, this month's high. So that's what I'd be watching right there. Hey, PMG, better late than never. Not much to talk about with Tesla still. Not much to talk about there. Intel. And then I'll get to Sterling's. Longer term, the challenge with this is they're trying to set up deals with using their chip manufacturing for other companies. So I would not be aggressively selling this. It's down by a pretty decent, because you could rip apart the company and it'd be worth more than this. So I would not be aggressively selling it. I'd be looking for on any pullbacks for, the support area is very interesting, back down at 19s to 20s, somewhere in there, because you can keep a very tight stop. And I would not get greedy on bounces. But so far right now, it's caught in a range. You can see it here below. If I bring this up, let me clean up the chart a bit so you can see what I'm looking at. You have a new support channel below the prior major support channel that broke. So this broke back in August, and now the prior major supports become very key resistance. So from my perspective, can't give you specific trading advice, but at the bottom of this channel, you can keep a very tight stop and watch for bounce plays. In order for me to get more sustained bullish, it has to be able to sustain a close above $25.50 to $26. Sustain a level. It's popped above it, but it can't sustain everything. See this level right here? Popped above it, and then three retests, and then broke down. Popped above it, tried to hold it, and then broke down. So even this most recent pop above it. So if you want to be conservative, watch 26. 26 right around here for a sustain and for it to build a support base. Other than that, if it did not do that, I'd be watching for pullbacks closer to this low area. What's Sterling watching? Watching a couple of daily, weekly potential double tops, OKTA and JD. OKTA. That is a very pretty potential double top. Very pretty. I just want to look at that on the bigger perspective chart. Against the weekly 200 also. So, and against a pretty significant resistance area. Would not be shorting this ahead of that, but you look at the gap left behind from earnings and look at where the target is. It's just in front of the full gap fill. So I'd be keeping an eye on that too. Definitely a good potential setup. Sterling and JD. JD. Now this is yes, it's technically, but it's a lower probability one. Keep that in mind. So this this is not one I'd walk away from. This is one I'd manage closer because this whole choppy nature stepping up into it. So keep an eye on that. And then you says into a bigger pattern. Yes, and that is a bigger pattern right there. You can even see it on the monthly if it were to break down. Is it still valid? Let's just see though, because is it valid? Yes. But again, I'd only be looking at the first and second targets if it rolled into the bigger pattern. So there you go. Completely valid. This would not be one I'd walk away from though. I'd look to manage it closely. All right. That's where we sit. Gotta go deal with some things this morning, so I'm gonna drop off before the open. But just pay attention to the tick, especially this morning. And this could get a little this could be a very interesting OPEX. Would not, unless this forms a stronger base, I would not be looking to aggressively buy rallies unless there's a lot stronger bottoming pattern formed. With that, I'll talk to everyone later. Bye for now.